It's a brand new week. Good morning, everyone. Welcome to this new week in the month of July. And this is 55 minutes of current and relevant business conversations. That's what we do on Business Morning. I'm Ini John Mekwa. We start, as usual, from the global space, telling you what's going on with global oil prices. This morning, we see that it's a little change as traders are assessing the impact of new European sanctions on Russian oil. This conversation started last week, and there are also worries about tariffs possibly weakening fuel demand as Middle East producers are raising output. Let's keep our eyes on the numbers at this time. We see Brent lost 1 cent, that's 0.1%. It's now at $69.27 a barrel. WTI is on the flip side, it gained 0.1%. Brings that up to $67.44 a barrel. The EU on Friday approved that 18th package of sanctions against Russia over the conflict in Ukraine, which has targeted India's Nigerian energy. And then Kremlin spokesperson said that Russia had built up a certain immunity to Western sanctions. They've been under sanctions for a bit. The EU sanctions followed U.S. President Donald Trump's threat last week to impose sanctions on buyers of Russian exports unless Russia agrees to a peace deal in 50 days. U.S. tariffs on European Union imports are set to kick off August 1, and U.S. Commerce Secretary said that on Sunday and is confident that the U.S. could secure a trade deal with the bloc before then. And then we come to Nigeria, where the country is facing a widening shortfall in electricity exports revenue as neighboring countries, namely Togo, Benin, and Niger, they failed to remit $40 million in power supply bills between 2022 and 2024. This data is according to the Nigerian Electricity Regulatory Commission, the NERC, and this has put more pressure on the nation's cash-strapped power sector, which is a failure to provide adequate electricity for over 200 million citizens. And NERC's 2024 annual report revealed that the Nigerian market operator issued a $56.07 million invoice to the three countries. Still on electricity now, but the subsector now, the Nigerian, the Enugu State Electricity Regulatory Commission, EERC, has approved a new tariff for Main Power Electricity Distribution Limited, which took over Enugu Electricity Distribution Company, cutting the Band A electricity rate from 209 naira per kilowatt an hour to 160 naira for a kilowatt an hour. EERC issued the order marked EERC 2025-003, entitled Tariff Order for Main Power Electricity Distribution Limited 2025 over the weekend. In a statement, the EERC described the new order effective August 1 as cost-reflective, with a tariff designed to reflect the federal government's subsidy on power generation for the benefit of electricity consumers. According to the regulator, the move was based on the Enugu State Electricity Law 2023, which authorizes the Commission to regulate electricity generation, transmission, and distribution exclusively within the state. And also, MTN Nigeria has been giving some largesse to its customers. The latest one was shared over the weekend.
It's another night for winnings for Nigerians, courtesy of the MTN Mega Billion promo. Every night for 90 days, MTN is giving away millions of naira to its subscribers when they simply recharge a minimum of 100 naira on their account. This is all part of MTN's mission to put a smile on the faces of Nigerians, spreading joy, rewarding loyalty, and showing them that MTN is truly everywhere they go.
What we are trying to achieve through this platform is to excite the market, to create the necessary excitement in the market post the price up exercise, post the issues or the challenges that we're having outside of our everyday living. So that excitement, we believe, is an opportunity for us to, first of all, reward our loyal customers. Customers who have stayed with us through thick and thin as we have navigated, the challenges of trying to stay operational and stay profitable in this market.
We really work hard to provide the best network, the best services, the best coverage, the best that you can find in Nigeria. That's what we work towards doing every single day. But that's not enough for us. It is also important for us to create moments that matter along with you. We don't want you to have to do anything different from what you do every day. Every day you recharge to use our network, and that's the way we've configured this promotion. All you need to do is to continue to recharge to use our services.
And then it's time for the live draws, the moment everyone waits for. The draws happen every weeknight, but Saturdays bring double the delight, with 23 million naira up for grabs.
Let's meet our 100,000 naira winner.
Consolation prizes range from 25,000 naira to 100,000 naira. But the top winners of the night go home with 1 million naira, 2 million naira, and a mega jackpot prize of 10 million naira for one lucky winner every Saturday.
3, 2, 1, blast off! Yeah!
The process is a very transparent process following all the regulatory guidelines from our regulator, NCC. And you can see here we had all our regulators and even some auditing companies reviewing or viewing the whole process. There is no really criteria. Just go into the draw, dial *91100# or use my MTN app and enter the promo.
Winners will receive a direct call from MTN's official number 300, and all prize payments will be made through their Momo PSB account.
And so as we speak, members of the Monetary Policy Committee are meeting. The meeting begins today with the Central Bank of Nigeria to take the next rate decision for the country. And we'll try to get into their minds and find out perhaps what kind of conversation they're having and what we could expect as the decision tomorrow. And we're doing that this morning with the Managing Director of Optimum Global Financial Services, Anosi Kimalu, right here in the studio. Anosi, good morning and welcome to the program.
Good morning, Amy.
Great. So we've seen 3 consecutive drops in Nigeria's inflation. Do you see that as enough grounds for a rate cut tomorrow?
So even though we've seen some easing in terms of headline inflation, core inflation has still remained sticky, and I think month on month in June we still saw food inflation sort of have an uptick. So while it's positive, I think things are still a little bit more shaky, and the MPC may want to stay on the side of caution, rather than rush to begin to make a cut now.
So you think a cut would be a rush, but the manufacturers would not agree with that?
Yes, I mean, everybody wants to see rates come down, for businesses.
Even President Trump.
So that they can, it could ease borrowing costs. But in order for the MPC to enable things to balance a little bit more, they may want to be cautious, because bringing rates down may also cause investor sentiment to wane, and that could make a run on the naira and cause instability in terms of the currency. So because of the currency mandate as well, the Monetary Policy Committee may want to be cautious.
We heard the governor of the central bank talking about the impact of FAC.
Yes.
And inflation.
Yeah.
So it does seem, even because we see the tightening is really much coming from the CBN, and yet we see currency in circulation, currency outside the bank, all of that. Perhaps, can we say we have now traced it to FAC?
Yeah. So, I mean, FAC also plays a role in terms of creating or elevating liquidity within the system. So, that too is another factor. Because of the devaluation, so FAC disbursements generally have to have been higher. They would definitely take that into consideration as well. And
but what can they do about that?
So that's the whole point of keeping interest rates high, right? So as to kind of drain that liquidity out of the system.
But the real sector is suffering it, and the politicians are still having it.
Unfortunately, when it comes to economic decisions, things sometimes may not be as balanced as we would like it to be.
So, I mean, we just keep holding to a tight stance and squeeze out the growth that we could have had. I guess there should be a way to find a balance.
Yeah, so that balance is exactly what we, the central bank has to go through every time. It's a very delicate act. And I would say that even though MPC or MPR rates have been at 27.5, we have actually seen the CBN sort of reduce stop rates on things like treasury bills and OMO bills, which generally is bringing down the costs of borrowing to the government and also sort of impacting market rates as well, right? So even though the MPR is sort of an anchor rate, market rates could still tend to be a little bit different.
So from your perspective now, you think it would be a hold or it would be obviously not another hike? I don't think we should even...
Yeah, no, I don't. I think the likelihood of a hike is really low. So we're looking at most likely a hold for now. Or, I mean, at best, maybe some 25 basis point cut.
At best?
At best.
So what does all of this do to the Naira? We've seen stability. I mean, a lot of people have had conversations with this period. They've been quite happy with the certainty of the level of the Naira, not that it's at its best value. But what of all of this, whether it's a 25 basis point, because you're not the first who's suggesting that, cuts, or a hold, and then you also talk about, first, the stop rates. We've seen the federal government lose some desire to go to the market. Some people say maybe they're waiting for the final quarter to do the last bid. But all of this, what does it do to the Naira and the sentiment, around Nigeria's economy and investment?
Yeah, so higher rates attracts foreign investors, attracts FPI flows, and that brings in dollars. So that helps to stabilize the Naira.
But that also costs the government more.
Yeah, by
servicing those,
yes, by lending at higher
securities.
rates. But that's what I've said, that's why it's been interesting to see that the government has actually been reducing like the treasury bill and OMO rates a little bit. So and we're still seeing interest from investors. So it's that could also be one of the things that they would look at to say, okay, you know what, there might be credibility for us to actually bring down the reference MPR rate as well, because even though they have reduced treasury bill stop rates, moderating it from what it was earlier in the year, we have still seen investor interest. And even in the equities market, we've also still seen FPI inflows coming in. So the policies that have been taken towards the stabilization of the Naira seem to be yielding fruit.
So I like to settle a bit on the equities because it's been really interesting. We've been on a run, and some people are getting scared. I hope this is not a bubble that is going to burst.
About to burst it out.
Yeah, what was really the attraction here? Is it the reforms? Is it what is it?
So I think it's a couple of things. One, the stability of the Naira has improved flows. So we have seen increased flows into the market. And I think the stability of the Naira as well has caused quite a lot of companies to rebound in their fundamental performance, particularly in the consumer goods sector, and the like. So a lot of people have been picking up interest in these names. And also too, we can't ignore the global what's happening in the global space with what's happening with Donald Trump. There's a huge level of capital outflows out of the U.S. Into Europe and into other emerging markets. So yeah, that's part of the reasons why we've seen this sort of bull run in the equities market.
So you think some outflows from the U.S. is ending up in Nigeria's equity markets?
Oh, yes, certainly.
Do you have data to support that?
Yeah, of course. If you look at FPI inflows or net flows over the past, 2 months, we saw declines at the beginning of the year, net outflows at the beginning of the year, and in May we saw a massive surge in inflow. So it was a net inflow from FPIs in May. We're yet to see June figures, but we would most likely see that trend sort of continued into June.
But when we have a lot of FPIs in the domestic market, it's kind of scary because, the FPIs, they can just...
They can go.
Yeah, and then that causes another problem, for investors in the country. But I guess we should make the most of it.
Exactly.
Once it's there. Then, talking about the MPC and the issue of the inflation, about the core inflation and the food inflation, even though the headline inflation, I don't think we can lose sight of those because it could just, come and hit us. But that's more for the fiscal authority.
Exactly, yeah, and that's why I think the MPC may be quite cautious. Because in June, we did see an uptick in food inflation month on month. So there was a decline in May, and then in June there was sort of an uptick, and seasonal. We're looking at maybe seasonal, but and core inflation has sort of remained a bit sticky, around 22.2. So given that, we might want to be cautious about the flow of inflation, even though we have seen some month-on-month sort of reduction. That may easily reverse. That maybe have been short-term. So I think it may be cautious, or to stay on the side of caution. It may be worth monitoring for a while, and that may be the way the MPC may look at it.
Now, how much more do you think we could hold, or do we wait until we see a drop in, especially food inflation, because we know it's a major driver? Yeah,
food inflation is actually quite a sticky problem because it's also driven by insecurity, which is kind of out of the hands of
the monetary authorities.
Yeah, the monetary authorities. So, unfortunately, it is a sticky one. But I think the reduction that we saw in May, April and May actually, in terms of food inflation was quite encouraging. And I think looking at the security situation, hopefully if things improve, then, to give more confidence.
Yeah, things improve. Especially security, we've had some not so good news from the food producing states
exactly.
in recent times. Yeah. So that obviously will reflect there. But I mean, Nigeria is not alone in this search for rate cuts. Donald Trump is very, very anxious about it, but it does seem that Jerome Powell can have a little bit of rest, even if it's for a month, because of their inflation also. Yeah. They saw inflation tick up in the U.S., and so President Trump has given him, okay, his job is not on the line now, but we don't know for how long that is. But everybody actually follows the numbers, right? And back here in Nigeria, we follow the numbers, whether we trust the numbers or not.
Exactly.
Yeah. All right. Thank you so much, Anosi Kimalu, Managing Director of Optimum Global Financial Services, for your time and news.
Thank you very much, Ini. Thank you.
All right, let's take a break. And one issue there is the fiscal authority and their contribution to this, especially when we talk about insecurity. Food is at the core of it. That will be our next conversation here on Business Morning. Please stay with us. This morning here on Channels Television, and so we're staying on the issue of especially food inflation and the role that insecurity has contributed to that, which will be a major consideration for the Monetary Policy Committee as they begin their meeting today. And we're having this conversation with the President and Chief Executive Officer, Lead Security Group in New York, is also the CEO of Lead Integrated Security Solutions here in Lagos, Ifeanyi Obinali. Mr. Obinali, good morning and welcome to the program.
Thank you for having me.
Great. So we've seen the news, we've heard the numbers of individuals who have lost their lives, livestock that has been affected. And even though these things seem to be different, when we get the inflation number, these are the factors that drive those numbers over time. Would you say the government is doing enough to bring an end to this insecurity that has given us food insecurity in the country?
I mean, the current state of the country today really doesn't say that the government is doing enough. And I think that when we look around what's happening in the country today, I feel like there's a lot the government can do to better the situations of our citizens feeling the brunt of what's happening in the country today. And one of these ways I feel like they can do it is to further build opportunities where we're subsidizing the market for food so that people are able to buy food relatively cheap in the market. Because when there's food shortages, it leads to people looking for various ways to actually feed themselves. The prices of food go up, low-income people are unable to actually live good quality life because they're not able to access these opportunities.
Are you saying that it's the lack of adequate food that's causing the insecurity?
Yes, people want to feed themselves, people want to feed their families. And also when they're hungry, they have to make a decision between food and better health, food and housing, food and education for their families, for their kids, and all of that. So it's an encompassing situation where you have that when there's that challenge of people being hungry and not able to feed themselves, it reflects on the overall economy of the nation. And the government really needs to step in here to actually subsidize this process to help get people to be able to actually take care of themselves, feel better, and go pursue other things that they have to pursue and take care of.
So someone said that poverty is at the root of the insecurity, and the farmer and herdsmen, that poverty is at the root of it. Do you agree with that?
It is true that there's poverty at it. The herdsman issue is also a challenge and all of that. But at the end of the day, if people have enough food in their tank, they're able to go out and pursue better things. But in the absence of that, you see civil unrest, violence, and all of these problems. So yes, poverty has a role to play in this, but at the end of the day, people still also need to be able to relatively get things cheaply so that they're not finding themselves in a place where they have to make a tough decision between how they live their lives and how they deal with social consequences.
So you have a company in the United States, and share with us some tips of how this is done. You talk about so at least people can get cheap food. I know from stories I've heard that you can go to some places, I think weekends, you can get some things for free. And tell us how, from your understanding of the system, how that's being done that perhaps could help here when it comes to food, affordable and accessible food.
One of the major things that the United States government has is the social welfare program. Now, the social welfare program is a program that says everybody, irrespective of how poor you are, needs to at least be able to get adequate food. So what happens is the poorest of the poor in the United States, they're all on food stamps. And what is food stamps? Food stamp is an opportunity, an amount of money the government gives you every month to be able to feed yourself, to be able to purchase food, to be able to go to the store and pay with that money as against your own money yourself. So the government did this just to subsidize that part of ensuring that people have enough food in their system to be able to move forward. There's also situations where, pregnant women have access to as much as they want because they need to be able to have enough nutrients in them to be able to help their unborn babies. So it's a different process, and I think that can be done here in Nigeria as well, where the poorest of the poor can be given access to opportunities like that so that they are able to actually better themselves, live a better life, and not add to the insecurity of the country because they're looking for ways to be able to feed themselves.
Talking about insecurity, they said it's the kinetic and the non-kinetic, and the use of AI and technology. How much do you perceive has been inculcated into Nigeria's security system?
I think Nigeria is still in the traditional fiscal security space. I haven't seen a lot of AI or a lot of technology in a lot of the people I've met, a lot of people I've talked to in the country. I haven't seen a lot of that. And for us in the United States, that's what makes our business excel, because we're blending traditional security with technology. So I think in this country, if we do that, we're able to better address long-term security issues. We're able to better know what's happening ahead, right, in the country, and be able to actually start finding ways to address them before they actually become a major issue.
So do you think it's an intentional thing not to adopt some of those high-tech into the system? Because we've talked about it. I believe we have the skills, or the skills can be acquired.
Yeah.
So why do you think we haven't done it?
Yeah, I don't think it's intentional. It all goes down to the situation in the country. Look at the situation of power supply, for example. A lot of these technological systems and AI tools depend on constant power to be able to work continuously, function properly. But you have a situation where even in our business here in Lagos, our offices in Lekki hasn't seen light for 4 months, right? How do you use technological systems when you don't have constant power supply? And I think that is much more of what the challenge is in this country, that these basic social needs to be addressed. And when they are addressed, then people are able to tap into that to better move themselves. And ultimately, the society will be more safe and secure when they have all of these opportunities. So I don't think it's intentional. I just think it's just we lack the basic services that is needed to run these systems effectively.
So there's also the issue of internet penetration, I believe. That is also a basic foundation for some of this AI and technology that we need. And well, we hear a lot of talks and effort by the government. We wonder how fast, it can be done. Talking about electricity, states are now supposed to be able to generate and distribute and all of that, and that's supposed to bring a change. There's also the renewables coming on board, and some states are adopting that for their facilities in the state. So, well, we hope with conversations going along that line, perhaps we would see more, and then that would be the foundation for, this adoption of technology.
I am hopeful, and that is part of the reasons why we have brought our business also to Nigeria, to be able to incorporate a lot of those opportunities, technologies, and systems that have worked well for us abroad and start bringing them back home here. We know it's going to be a couple of challenges, especially talking about all of these issues that needs to be addressed, but at the end of the day, we're determined to just ensure that we're getting into this space and start attracting these opportunities back home and start looking at the long term, because at the end of the day, we may not get all of this done today, but where are we going to be next year, the year ahead? And that's what the goal of what we're doing is, and also just ensuring that security is given ultimate attention in this country.
Yeah, and I believe, I mean, for individual businesses, you can go the way of renewables. I think a lot of, even though it might increase the operational costs,
right,
obviously, but that could be a way to go.
It is true. So in our business right now, we actually had to go get the solar system, right, for our offices, and complement that with, running generators and all of that. But at the end of the day, I totally agree with you that if we start tapping into other sources, right, other sources of maybe power or other sources of, opportunities that can help us address security challenges in this country and ultimately help us power businesses, then we have to definitely get involved in that.
And then when you have a picture of some of those northern states, where the food producers are resident, and some of the things that have been happening there, and you hear reports of there was an attack. Before we even get the news here, it's about 24 hours or 48 hours. It actually seems like a very long time before we can get, whether it's renewable, even though they have the natural resources, or is the grid power and technology. It seems like a long way before we can get it to people like that or places like that.
Yeah, so that's the work that government really needs to do, right? To start ensuring that we're putting the system that is getting us real-time information, not necessarily when they happen, before they happen, so that government can actually work on trying to disrupt or prevent their happening, but also inform residents and citizens of the area of possibly what they think is happening. So everybody is going to actually pay attention to their surroundings and just ensure that they're protecting themselves. So a lot falls on the government, but I also think that, you know, private organizations can also actually get involved in this, and that's a lot of where we are also coming in, because we want to build a hub that helps get real-time information and pass it to the right people on time to help address conflicts or tensions before they happen.
All right, thank you so much for coming on the program. Obviously, the issue of security needs not just the government, but also the private sector. President and Chief Executive Officer of Lead Security Group in New York, U.S., and also CEO, Lead Integrated Security Solutions here in Nigeria. Ifeanyi Obinali, thank you for your time.
Thanks for having me. Appreciate it.
Let's take a break. When we come back, we'll see what's happening in the global space. Will Ibong will be here. Please stay with us.
For crossing borders irregularly.
Get a glimpse of the world around you on The World Today. Weekdays at this time.
It's still Business Morning here on Channels Television. Let's head to the global space with Will Ibong. Will?
Good morning, Ini.
Good morning.
It's a bright morning. That's how I'll just say it. Markets are looking perky. We're going to be expecting a lot of economic data from global space, Nigeria as well.
MPC starts today.
MPC starts today.
Yeah.
So we're just expecting that most major economies are sitting in. So it's basically inflation, MPC decisions, rate decisions. That's what we're just going to be hearing from this week.
And the trade tariff too. We're counting down to August 1. I think that's next week.
Yes, and he says no going back on that. No going back.
Yeah, but I mean, we still expect to hear some trade deals. For instance, I think the U.S. trade minister or so says they're expecting a trade deal from EU.
Well, so let's see if EU is going, because right now they've not heard anything. They're expecting to meet with the US today. That's the news. So we don't know what Donald Trump has in stock for them. You know, he could come around and say, look, we're sticking with those.
Truth Social. You find out what it has.
Well, Ini, I need you to get me on Truth Social. You know you're there, so let's just go. So things we expect this week. Let's kick off with that. Well, as I mentioned, Ini, we're going to be expecting July flash PMI data and preliminary date figures are coming in from major economies. We're getting data from India, we got data from, other countries. July the 24th, that's what India is going to be expecting for India. We're going to also be watching for shifts in demand, output, and business confidence. And this is amid, the postponed tariffs and evolving global trade risk. Now, looking at the EU now, we're going to be expecting interest rate decision from that Eurozone. The European Central Bank is meeting this week with inflation slowing and growth subdued. Rates are expected to stay on hold, possibly the last pause before a potential cut in September. Let's shift now to the U.S. What are we expecting this week? Fed speakers are going to be dominating the calendar. We see alongside U.S. data on home sales and durable goods. These will offer signals on the economy, the Fed rates part, and overall economic momentum. Let's look at Asia now. Asia Pacific markets. South Korea is releasing its advanced GDP for the second quarter of 2025, a key bellwether for regional exports. We're also going to be watching out for inflation prints from New Zealand, Hong Kong, Singapore, and Malaysia. UK, let's see what's happening there. UK retail sales will test the resilience. We're going to be expecting that. And German sentiment, confidence, business confidence, consumer confidence. We're going to be watching out for that. We're going to be getting results from the GfK in Germany, and A4 surveys also going to be coming in. Clues on business morale and economic stagnation concerns are dominating conversations. Let's see what's happening in other parts now, apart from what we're going to be watching out for. China's central bank has kept its key lending rates unchanged, with the one-year loan prime rate at 3% and the five-year rate at 3.5%. Now, this is coming despite signs of slowing economic momentum. Their GDP grew by 5.2% in the second quarter of 2025, down from 5.4% in the first quarter. Now, retail sales and domestic demand softened, but the People's Bank of China held off on cutting rates, signaling focus on stability as growth remains above target. The analysts say fiscal tools may be favored over monetary easing for now. But still, we see the risk from the U.S. tariffs, weak property sales there, and slower external demand. Nomura projects growth may fall to 4% in the second half, potentially prompting new stimulus. Still in China, we see China's latest round of European sanctions hitting a number of companies and banks in China, prompting Beijing to respond and protest, and promising a response that would safeguard and protect its own firms. The European Union has sanctioned 2 Chinese banks and 5 companies based in China on Friday. That's part of moves, part of its latest round of sanctions against Russia over its invasion of Ukraine. Now let's see what's happening in other parts. We're seeing car maker Stellantis expecting a net loss of 2.3 billion euros. That's about $2.68 billion for the first half of 2025, blaming early impacts of U.S. tariffs, pre-tax charges, and higher industrial costs. Stellantis also withdrew its full-year guidance in April and reported revenue of 74.3 billion euros, and that's down from 85 billion euros last year. The company said it took a 300 million euro loan. That's the 300 million euro that hit from tariffs alone. That hit from tariffs alone, and that saw slower shipments in North America, falling 25% year-on-year due to reduced imports and fleet sales. Now, Stellantis, we know it owns brands like Jeep, Fiat, and Peugeot, releases their full results. We're expecting that July the 29th. We also saw its shares plunging over 37% this year amid concerns about profitability and global trade tensions. Now, news from the U.S. Imports of rare earth magnates from China to the U.S. has surged 660% in June, reaching 353 metric tons as firms rush to stockpile critical components amid easing trade tensions. China exported 3,188 tons globally last month, nearly 160% more than May, with the U.S. and the second biggest buyer after Germany. Now, the spike follows a recent U.S.-China trade framework that eased some tax restrictions and export controls. Trump's looming 30% tariff on EU goods may push businesses back to the UK. Good news for that, reversing some Brexit-era losses. And with trade deals on both sides, lower US tariffs, and spare manufacturing capacity, the UK is looking more attractive now. Brexit drove firms and investment out in 2016, but by 2025, that may reverse. Trump's tariffs, set to begin August the 1st, could make the UK a cheaper base for US-bound exports. Analysts say a wide U.S. tariff gap with the EU could help Britain regain ground as European manufacturing hub. The UK now enjoys a 10% car tariff with the US still breaks, and a reset EU trade deal under Labour Prime Minister Keir Starmer. Meanwhile, in the UK, water appears to be dominating talks in the UK. We're diving into a major shake-up here in how England and Wales are managing water services. The Conliffe Review, outlet by Sir John Conliffe, is calling for the complete overhaul of the regulatory system. But we're going to be joined by Juliana Olainka, our London correspondent, to give us a deeper insight into that. Good morning, Juliana. It's good to have you.
Good morning, Well.
Juliana, it's water, water everywhere, but it seems none clean. Can you talk to us about this Cunliffe review we're hearing about here?
Well, yes, the Cunliffe Review is a significant review of England and Wales's water regulation system. This is the first time that it's having this scrutiny since privatisation in the late 80s now. Sir John Cunliffe, who's a former Deputy Governor of the Bank of England, he's actually speaking live now on British news channels, just basically given an overview of the recommendations, which basically are to replace Ofwat, which is the current regulator, and he wants to merge those responsibilities from various government agencies like the Environment Agency, Natural England, and the Drinking Water Inspectorate to create one single unified water regulator. And this regulator is going to have legal powers and stronger public interest oversight because there has been so much scrutiny of the system over the past few years. Now, the report describes the current landscape as fragmented and overlapping. Those are the kind of sound bites that have been coming out of Westminster, and I think the sector over the past couple of years, it's quite long. I think the report is about 600 pages. There are 88 recommendations in total, but crucially, it's really moving the discussion away from nationalisation and more about modernising regulation and ageing infrastructure amid climate change and just the changing makeup of Britain, which is, of course, becoming more populated.
Okay, well, how real is this shake-up here? We know the review is out, recommendations have been made, as you mentioned. Could this actually happen, and how soon should we be seeing this?
Well, it's possible. Parliament, of course, is on recess, so it's going to be a very slow news. Well, we hope it will be a slow news period over the next couple of weeks because everybody will be on holiday. But look, it's a bold proposal. This is not yet government policy. This is, of course, just recommendations, but it's quite serious. I think there is genuine political will to act. Over the weekend, you have people like Steve Reed, who's the Environment Secretary, basically admitting publicly that the sector is failing everybody, and there are plans to produce this new water bill in 2026. Bills are also climbing. So yeah, we'll have to wait and see. But as I said, you know, the author is speaking live on British television right now, so it's a serious topic.
Definitely. We're hearing talks that, you know, a single regulator could boost investor confidence. But are London, the big backers in London, are they buying this? What are you hearing on ground?
Well, I think, you know, as with all sectors where there is potential, if there is stability, investors are happy. I think the current system with like multiple regulators and no clear long-term strategy has shaken investor confidence, particularly around the Thames water crisis that's been ongoing for several months now. So I think the recommendation of having a single, well-run regulator could offer more predictability and, yes, help with the environmental compliance overall.
But, you know, families, water is really important. It's one of those utilities you can't but need and use daily. We all need water. But families already are facing 36% bills hike. They're kind of desperate right now. Will this overall, looking at the proposal, will it really improve affordability or just add another layer of red tape to what already is going on?
Well, who knows? Well, you know, water bills are up already this year by about £126, which may not seem a lot, but considering we're seeing hikes across multiple bills, that is still a lot of money, particularly when you're paying more, but the service is struggling. It's buckling under the system. So I think that hopefully, you know, within these several recommendations, there will be something that offers support to the vulnerable, I believe that Cunliffe spoke of this national social tariff, which is one standardized scheme to support poorer households, rather than leaving it to individual companies that will always try to find a way to make buck for themselves. So I think, this is a good step forward. At least now, there has been scrutiny of the industry by an independent body. Not only have there been recommendations, but there is a system in place for the scheme to be adopted. So perhaps the government will take this seriously and there will be these remarkable changes.
But there are also some concerns there about the recommendations, maybe like in terms of water companies. There's a possibility, they're saying that they could dodge fines under the new recommended turnaround regime. Is this a possibility based on what you're hearing on ground? Is this a concern for stakeholders here?
Well, the Cunliffe review is just been published. It's been published, I think it was published about 8:15 in the morning. So we haven't had much reaction. But it's an independent body. And just now, I'm looking on my screen, I can see that Steve Reed, the Environment Minister, is actually speaking live in response to what Cunliffe proposed. So I think the transparency is clear. I think the fact that modernization and digitization and trying to, move ahead of this infrastructure that's buckling is a good step forward. So we'll have to leave it to the experts to provide the responses that we need.
Definitely, Juliana, because we all need clean water, we need cheap water, and we need affordable, it has to be cheap, affordable, and clean as well. Thank you so much, Juliana, correspondent in London, always bringing us the details live and direct. Thank you.
Thanks, Will.
Now let's check in on what's happening in other areas in the EU. We see the European Union has sanctioned a prominent Iranian oil trader and several of its companies, part of its latest round of measures targeting Russia over its war against Ukraine. According to the EU, Hossein Shakani, whose father is a senior advisor to Supreme Leader Ayatollah Ali Khamenei, was added to the bloc sanctions list for its role in the Russian oil trade and as a central player in the country's so-called shadow fleet. It also named its Dubai-based firms Admiral Group and Malivas Group Limited. Let's see, still in the oil space, Turkey says it will end an agreement that allows the export of oil from Iraqi Kurdistan through its territory in July next year, according to a decree that was published in the official gazette. Now, according to a senior Turkish official, Turkey is unhappy with the underutilization of the pipeline under the current deal and sees greater potential benefit for itself and Iraq from a new agreement. Let's see how that pans out for Turkey and Iraq in the coming days. So those are the highlights for today. Hopefully tomorrow we'll bring in more details. Hopefully good news. Water in the UK. I don't know if we deal with water here in Nigeria, but you see, they're looking to, make sure that it's no longer nationalized, not just in government hands, private hands, and also to deal with some illegalities, I think, just around the management of the whole water system, the sewage, and how water is processed in general. So I think water is a very crucial thing, and I think it's very important for every industry. We need water, even for the manufacturing.
Of course, everybody needs water. We need,
water to survive.
More water in our bodies.
More water in the bodies.
But Will, I think, one other thing you'd have discussed with Juliana is what's going on post-Brexit between the UK and EU. Because we've seen the UK struggle for markets, for labor since Brexit. And of course, EU used to be their major supplier for most, their major market, their major supplier, but because of the demands of Brexit, the paperwork and the bureaucracy and all of that, we've seen them lose some of those markets. So it does seem that even though they seem to be favored with the US, but the tariff and the fight between the US and the EU is giving them some benefits.
Yes. We just talked about that, seeing that the UK might be benefiting benefiting from this?
Yeah, I think if President Trump sits down and calculates that, he might come back for
the UK.
Yeah.
He doesn't want any country to benefit from this.
Yes.
Has to be the US benefiting from this.
Yes, and to think that he gave a special concession to the UK.
Yes.
So if he now sees that that's paying off and bringing the UK closer to some benefit from the EU.
Oh, no. We're going back on this. No.
I don't think
I don't want to say it in Trump's voice here. So I don't think this is going to be go back to the basics, to the drawing board, and probably slam them with more tariffs. But let's wait for August the 1st, and that's when we're going to know who's really going to be paying what and if they're going to be paying at all.
They will be paying, that's for sure. All right, Will. All right, just before we go, we'll tell you how the market did. The domestic market here in Nigeria has been doing good. One of my guests here said it's an overflow from, the flows out of the United States landing in the Nigerian market. A good one, but with all those FPIs, all those hot money, you always have to be careful because a little rumor could make them opt out, and that will now bring back the market. But, let's enjoy it while it lasts, but it should be more of domestic investors. That would be the better news. Anyways, whether it's domestic or foreign portfolio investors, last week was a great one for the Nigerian Stock Exchange, the Nigerian Exchange Group, the stock market. It used to be Stock Exchange, NSE. So the all-share index went up more than 4% last week, 4.31% to be precise. I think we started the week about 124,000 level. We closed the week at over 131,000 for the all share, and for the market cap went up to 83.24 trillion naira. Volume was in green, value was in green, deals were in green. It was a green week. I think every day of last week, I don't know if we missed out one day, but it was a very green day. And the banking sector and industrial goods, they drove it last week. Banking was up. There you have it. More than 5%, 5.36%. The figures did it. The news around first hold call, that also, I think for the first day or so. No. First of all, when the news came about the off-trading transaction, we saw a lot of investors very happy with that. Pumped money into first hold call, and then of course there was profit taking, but there was a recovery before the end of the week. So that was a major driver for the banking. Consumer goods was up 1.34%. Industrial goods 19.1%. The Dangotes did that. The Boa Cement also. I think Boa Cement was a market mover once or twice last week. They led that 19. So you can imagine how much investors were able to take home. Insurance, I'm told they are no longer penny stocks, but they had profit taking on them. Oil and gas hasn't been so popular these days. But we'll see what happens to that sector this week. It was in the red, closed in the red last week, 0.76%. Top gainers for last week: Unicel, Interlink PLC, Boa Cement. Top gainer, Associated Boss Company PLC, beg your pardon, also a top gainer. Top losers, Academy Press, RT, Briscoe, and Cutics. Top trades, first hold call, the news of the week. FCMB also made that. And then Fidelity Bank also made up to the top trades. For the smaller unlisted market, I believe they're also in the green. 1.62%. That's for the smaller unlisted market. And their market cap has gone up to more than 2 trillion naira. Value, green, deals, green. So I guess people who are not able to jump on the major NGX market, they just go to the smaller unlisted market. Advances, Central Securities Clearing, Food Concepts, and Okitipupa Oil Palm. Okitipupa, we know, has also they've been trying to come up on board and getting the attention of some investors. Decliners were UBN Property, Friesland, Capina, Lagos Building Investment, Top Trades, Okitipupa, Friesland, and Central Security. So it was a good week for our markets here in Nigeria last week. Yes, when you talk about the fixed income market, the government is trying to reduce its costs, and there we see rates going down, but that has not deterred a lot of investors. We've still seen the scramble for those securities in the fixed income market. It's a good time to be an investor in Nigeria at this time. We hope it stays that way. Now, that's where we draw the curtains for Business Morning today. Ladi Williams and Will Ibong, they'll be back at 1 p.m. to give you updates from the world of business. Whatever I miss now, they'll give it to you and then give you intraday numbers. Hopefully, we'll still be reporting green numbers by then. I'm Ini John Mekwa. Enjoy the rest of your day and make some money.